Hello everyone, I'm the Canadian Dividend Investor, and on this channel we talk about finances, with the focus on the Canadian and American stock market. I'm not a financial advisor, so make sure you do your own research. On today's episode, I'm going to talk about two stocks that you can keep your eye on this week. Stick around and see what I have for you. The first stock I'm going to talk about is GoEasy, which goes by GSY on the Toronto Stock Exchange. GoEasy has a market cap of $1.7 billion, and over the last 6 months, we've seen the stock rise 65%, and it's gone up 45% from the pre-pandemic highs. GoEasy is headquartered out of Mississauga, Ontario, and provides leasing and lending for subprime investors, which is typically defined by people who have struggled with their credit and might not get a loan from a bank. They also run a lease-to-own operation, where customers can obtain furniture, appliances, and electronics with no down payment. The interest rate they're paying, though, is typically at least 30% on all their purchases. From 2016 to 2019, GoEasy saw both their revenue and their earnings have a steady increase. In the first quarter of 2020, they just missed out on expectations. However, in quarters 2 and 3, they beat out expectations by large margins. This Wednesday is when they report their earnings for the fourth quarter of 2020. GoEasy does pay a dividend at 45 cents per share paid out quarterly, which comes in at a yield of 1.57%. They also have 6 years of consecutive dividend growth. They typically raise their dividend for each April payment each year. And over the last 6 years, they have averaged a 32% dividend increase. And over that time, they've increased their dividend a total of over 400%. As you can see, in 2014, they were paying 8.5 cents per share and are all the way up to 45 cents per share. As of recording, I don't own any shares in GoEasy. However, after researching it, I find that it's an attractive addition to the portfolio, and I'll be looking to make my first purchase this week into it. I hope you liked the first report on the GoEasy, and if you did, hit that like button. Before we get into the second stock, I'm going to ask you to hit that subscribe button, as it helps the channel grow. All right, into the next one. The second company we're going to talk about is the North American Construction Group, which goes by NOA on both the New York Stock Exchange and the Toronto Stock Exchange. Of the companies that we've discussed previously, NOA would be one of the smaller ones, as its market cap is just $387 million. North American Construction Group is headquartered out of Atchison, Alberta, and is Western Canada's largest fleet of haul trucks, shovels, and mining equipment. In the first 2 quarters of 2020, North American Construction Group beat expectations by large margins, while just missing out on expectations in the third quarter. This Thursday, they report their fourth quarter earnings for 2020. Up until 2017, they had not yet seen profits. However, since that time, they've not just been profitable, but they've seen each of their earnings and revenue increase by large amounts. NOA does pay a very small dividend of in around 1.3%, as they pay 4 cents per share quarterly. They didn't increase their dividend in 2020. However, with the company growing, it'll be interesting to see if they do raise it shortly. North American Construction Group had a good 2020, and while I don't have it in my profile yet, and I likely won't be adding it this week, I have now put it on my radar. I want to thank you for lending me some of your time. And if you enjoyed the video, don't forget to hit that like button and hit that subscribe button with the bell to make sure you get notifications of future videos. Have a great day.